Hi everyone, this is Mayank and welcome back to my channel. So today's video is a discussion on a particular stock. It's a very good, very profitable, very well-known stock. So we'll discuss on that. Now, since I'm talking about discussion, it's that the research from my side is only preliminary. Everything else I'll discuss in this today's video. So please share your comments and your thoughts on the same stock if you have any in the comment section. This will help me also to decide more on the stock if I shall go and invest in it, this stock or not. Now you have very small subscriber base. That means people have been following me and supporting me from a good amount of time. So you can always share your feedback and help me also decide whether I should buy this stock or not. Like it's a request also from my side. So let's talk about the stock. I'll minimize the screen and go back directly to the stock part. The stock, as I told you, it's a Dmart. So Dmart goes by the name Avenue Supermarts Limited. So people don't know about Dmart, which is very unlikely to happen, but still, it's a big box retail chain of India, like Kroger's of India. You can say if you don't know about Kroger's, go to a YouTube channel called Man Company. Search a Man Company in Kroger's. You will find about that particular stock, sorry, particular company details and everything, how they were, how they grew, and where they are today. It's a very good company. It's a very good case study also. You can definitely go and should watch that. Coming back to Avenue Supermarts, it's a primarily engaged in the business of organized retail and operates market under the brand name Dmart, but they operate in the value chain segment, not in the premium or ultra premium segment. Okay, this is a very niche market or very large niche market what they are targeting, because India is not a predominantly rich country, it's a middle class country, right? It's a developing nation also. Rather, it's a wrong word to say middle class country, but it's a developing nation. So we have a large population which are into the value chain like segment, right? They operate in that particular segment. Every supermarket operates 246 stores. So I'll just scroll down. So they have 246 stores in 11 states and one UT, out of which 15 stores are in Maharashtra and 26 stores are in Gujarat. So they are predominantly very dominated in the western sector of the country, western region of the country, and they have good amount of stores in the southern region of the country as well. They are trying to focus on the eastern and western right now, but expand their network in those areas. And for that, they have started some new stores in financial year 20. They opened around 38 new stores, and last quarter, April, May, June of like this year, they opened 10 new stores, out of which they're focusing a lot on tier 2 and tier 3 cities. So they're expanding beyond tier 1 and beyond western and the southern region where they dominate. So this is what they do in a nutshell. You want to buy anything which is in big quantity. I mean, say, let's suppose you want to buy face wash for entire family. So if your family uses 4 different kind of face wash, if you want to buy, maybe you can go to Dmart. Just don't go for only for face wash. It's not worth of that crowd and that time what it takes. But if you have this kind of good amount of purchase, you can go there and buy once in a month. It will save you a ton of money. From my personal experience, I have been there around twice when I was in Bangalore before this pandemic happened. I didn't like the experience because for me, a face wash goes for a month, in some cases goes for 2 months also. So buying a face wash or maybe any kind of things like I don't buy grocery from there, but if you see overall, the kind of value or my average total order size doesn't help me with the time frame and kind of energy it takes out from me, and also it's a little far from the place where I stay. So overall, it's not a value proposition for me. For people who have a lot of things to buy, like monthly groceries and a monthly budget, for them it's a very good store. The price and all is very good. Like people have not been there, is for them the price is very good, very discounted, even branded, unbranded, or you can say rather unbranded, I'll say it's private label what Dmart put their own label on that. So all these products are good, good quality, like decent quality, if not very great quality, but very well comparatively priced. So you can definitely visit supermart, Avenue Supermart or Dmart if you have such kind of requirement. Now that's what they do. If you want to understand more what they do, please visit this store, understand what they do, how they play the entire game. For that, at least you should visit. Now, come back to the business part. This is what they are like. These many stores and everything. They have launched a new segment called e-commerce, which goes by the name Dmart Ready. Now, through which they can buy, you can buy grocery at your home. Like you pay some delivery charge, but they will deliver all the groceries, everything what they have. We'll compare that also in the video. Just wait for like 4 or 5 minutes. We'll go back to that part also, right? So Dmart Ready is there. In Dmart Ready was available only in Mumbai in 2020, but now it's available in 12 more cities also. So this has given a good growth. In 2020 they have a revenue of 354 crore. Now I think they would have crossed the revenue 1000 crores also. For this they converted some stores. They converted 2 stores in Mumbai as a fulfillment center, for the e-commerce venture in their Mumbai or Mumbai region. For other cities also, they might go for this kind of model where they'll create one or two fulfillment center in those cities. So this is what they do. Basically, there's nothing much, no rocket science about understand about what Dmart does, how it does. There's some book also on that. I forgot the name. If I find, probably I mention in some other video. But there's a book also how they operate. There are a lot of articles also how they operate. If you're interested in that part, how they operate, definitely can do a lot of research, read about it. But what they do, it's a one liner or maybe 4 to 5 liner thing. What they do, right? It's a very small thing. Let's jump into the fundamental part. Fundamentally, this company is big. 2 lakh 58,000 crore of market cap. Can they become 10x from here? Most likely, it will take a lot of time. But there is one big opportunity through which they can become 10x very fast. We'll talk about it. That also, give me a moment for that. ROC is 15.8, ROE is 10.5. That is good in because the segment what they operates is actually a value segment where the customers what they target are very price sensitive. So in that, if you want to dominate in that region, you cannot have an ROC of 30-40. That is not possible because your margin is very thin over there. Promoter holding is 75%, which is max what they have. Interesting part is that they have a debt of only 647 crores and debt to equity ratio is 0.05. That means they are virtually debt free company. Now understand operating such a big store. Their stores are really big. Okay, so such a big store, so many staff, maintaining an inventory and everything. If you can become a debt-free company, that means your operational expertise is unmatched and top-notch quality. That's the only reason how you can match this kind of numbers like debt-free, huge profit, good amount of ROC and everything. So this company is management-wise, there is no doubt. Everybody knows the money sir how he operates and whatever done with Dmart. But from the numbers perspective also, it all justifies. Now let's see quarter on quarter results. Graph also we'll see when like in the last part of the video, but let's see about quarterly results. Quarterly results, a lot of article came like in this particular, a lot of news sites like I opened News Indian Express. They told their Q1 profit jump multifold to 642.89 crores, almost sales almost double. Now this kind of headlines make us fall to a wrong impression. How I'll tell you, when they say sales almost double, so last quarter sales was 10,038 crores. It doubled with respect to year on year quarter. That means same quarter last year 5,183. But they didn't talk about that this particular quarter was all destroyed because of COVID, right? So this peak COVID phase 2 was there in this particular month. India was going through mayhem. People died like huge numbers, right? And there was lockdown and everything. So you cannot just compare that quarter with this quarter because the scenario was completely different. The best comparison what you can do right now is with March maybe. Okay, to some extent we can do with March because there was no COVID much. Economy almost opened up that time. So you can do some kind of comparison. So from that perspective, their sales growth was around 40%. Net profit, they told multifold. It's not multifold. It's around 50% only in terms of net profit growth. 414 to 643. You cannot compare with 95. This is wrong. Don't fall for this kind of articles, this kind of headlines. Dmart is a good company, no doubt. So maybe these numbers will not make you fall to buy wrong stock. But this kind of headlines for a bad or for a fundamentally wrong stock can make you fall in a trap of buying a wrong stock. So don't just jump into these articles and feel good about a stock. Do research, compare the numbers, make sense out of it, and then only make your own decision. So this kind of disclaimer also. Profit and loss wise, if you see, sorry, profit and loss if you see, this company's sales was 2,200 crores in 2012, and now they have done a sales of trailing 12 months 35,000 crores. So that's a growth like you can't, like unimaginable growth you can say, which this kind of growth like there is 10x 20x kind of growth. Same goes with net profit also. No, 60 crores. They have done almost 2,000 crores of net profit in trailing 12 months. That's like almost 30, more than 30x kind of growth. So this is a tremendous kind of growth. 30x in 10 years. If a store goes in that kind of revenue, that's a multi-bagger for any kind of investor. Now they have not been in the stock market for 10 years, but these numbers can make any stock go multi-bagger and with profit and everything. So in no quarter they made any loss, right? So every quarter they increase their profit. So these kind of stocks are very rare to find and they always turn out to be multi-bagger. Now let's talk about the reserves. Reserves increase from 148 crores to 1,300 crores. Now, if you put numbers in perspective, there is like every number if you see, you become like, oh, this is great, oh, this is great, oh, this is great. So results is great, net profit we discussed is great, sales increase great, operating profit margin, they always operated in a standard margin 6%, 7%, 8%, 9%, that became 8%, then again it touching the 9% range. So they always strive on the maintaining that percentage no matter what. One store, two store, 100 store, 200 store, doesn't matter. The operating profit margin they keeps intact, the profits they kept intact. So there are two kind of companies, one which grow revenue wise, not profit wise. Like the revenue might increase 10x, but the profit will increase only 2x. But this company, their profit and revenue increase directly proportional in proportional way. So if the revenue increase 10x, the profit also increase 9x, 10x, 12x in that same range. Operating profit margin, no matter they open a new store, profit margin they will not compromise on that. So this kind of fundamentally strong management or fundamentally strong operation is very rare to see in any kind of company, be it any sector. It's very rarity to see, and that's why this company is so good for investment, so good for investors, and also they have always done good in terms of business also. It's a very good, I'll say it's a very good quality from a company and from also management side. And this is something which we all can also learn if we want to start some business or already in some kind of business or any kind of financial decision making where you know to invest and make some kind of return. So this kind of operational expertise or operational focus on number is very important if you want to do something from operational financial side, right? Maybe it sounds like Gyan, but this is something which we all can learn from Dmart. Shorting pattern 75, what I told maximum what they can have. Retail has only 9.42%. Retail actually never got opportunity to buy into this stock. The people who bought some in the kind of IPO, they become multi-bagger. They sold and some other people bought from them. But retail never ever had an opportunity to buy from market. So FII is always 8.89. They reduced it to 8.83. DIS reduced it to 6, increased it to 6.77, but there is not much kind of difference. It's always in that range, like 10%, 9%, 8%. Retail is only 9.42%. That also they increased this particular quarter because FIIs has left the market a little bit. They sold, so it reduced by almost how much? Around 0.5%, and that 0.5% went to public. So it's like it's just a small amount of stock change hands from FIIs to public, or a little bit went to DIIs also. But in a nutshell, public doesn't have much control on this company. It's all the promoters, strong promoters, and little bit of FIIs and DIIs. So this is how the fundamentals are for this company. For me, this, like, it has always been good stock, but if you see from today's discussion, the numbers right, this is tremendous numbers. This is the best one can have from the longer horizon. 1 quarter, 2 quarter, 1 year, 2 year, every company posts good numbers. Maybe for 3 4 years, some company may put very good numbers, but putting same kind of number every other year for next, like for last 10 years, that is not a very like usual sight to see. Right? So this was the fundamentals, little bit of the company. Now comes the e-commerce part, which I was like more interested in part. So they call it Dmart. Okay, now Dmart delivers in a lot of places. So not in my place for sure. The bodies don't deliver. Okay, we are considered remote place, like more far. So people don't generally start with our place, or it's a sad thing to say, but people normally don't consider that as a very important market. Okay. Now, so Dmart Ready, the most interesting part of Dmart Ready is that the product price of the product what they sell here. For example, Dark Fantasy 51 rupees off. I don't know what the price of it. Let's click on this and check. So what I want to mention is, for example, Dark Fantasy. Please guys load. So Dark Fantasy costs 99 here. Now, it doesn't matter that if you buy online from Dmart, it will get it higher price compared to if you buy it from the retail store. Nothing like that. The price of Dark Fantasy for this particular 300 grams of version, 99 rupees, will cost you same on the online also, Dmart Ready, and also in the Dmart. What additional they charge the delivery cost. So for them, it's same. They want to maintain that same margin. They want to sell it the same price. If you want convenience, you pay for the delivery cost. Rest everything remains same. So basically, you save time by not going to the store. This don't increase their margin by giving it a higher price. They keep the same price because the store and everything, rent is everything remains same, staff remains same. They don't invest. So it's a very concept is very clear. Neither they will burn money, neither they will try to earn more out of it. It's like win-win situation for both. Nobody wins, or rather I'll say nobody loses here. So this is very interesting. Either normally what happens, the store prices are different than the retail online prices, but the Dmart case, the price is very same. Now, I I operated a restaurant in the past. Still, my current business, what I am, apart from my job, also involves some kind of food. Okay, so it's a backpackers hostel where we also serve food. Like if I tell you what business I am right now, so that is a backpacker hostel which also serve food. So in some cases, I know the price of the food and all what we purchase there, like grocery. So just give a comparison. Tur dal of Tata Sampanna, like this feel weird to give comparison products, but maybe it will make you understand how Dmart differentiates. Tata Sampann Tur Dal is 156 in Flipkart after giving discount. Let's suppose I'll search here. I just did it in the past also. So pulses, if I go here, where is Tur? I don't know where is Tur. Oops. So they don't have Tur or what? Dal. Sorry. So they have Tur Dal. If you click on Tur Dal for Tata Sampann, same thing they sell for 129. So see the difference over here. So its difference is around 131 rupees, like 27 rupees difference when it compares to Flipkart. And Flipkart market itself like cheapest store and cheapest grocery store and most convenient grocery store and everything. But when it comes to Dmart comparison, they don't even stand even close to Dmart. Okay, so this is the kind of value what Dmart provides, and this is the reason why they're, if they create that supply chain where they can deliver to places like Guwahati, for example, or places where Flipkart deliver and Dmart doesn't deliver, like tier cities. If Dmart can do that, that will kill the entire market of Flipkart or maybe Amazon pantry or any kind of market. They will just destroy everything because of their this price difference what they can deliver. How they can deliver this price difference? There's a good articles and YouTube channel videos are there on that how Dmart operates and why they can offer something at this price where companies which are highly funded still making loss like Amazon and Flipkart cannot. Even after venture funded huge 10,000 crores of loss that do every year, still they can't provide that price and Dmart can. So big huge case study, you can go and read about it also. This is just an example how Dmart operates on the e-commerce side. So two things very important. First factor, price is same in terms of your online and retail store for Dmart, and second, compared to peer group, peer in the sense Flipkart or Amazon Pantry or maybe JioMart also, they are the best in terms of price. And definitely, I'm sure their service will also be good because they have done it in the past and they will never compromise the service. So definitely, if you are in that city, if you ever availed their service, do please let me in the comment section so that it will help me to understand they are actually doing what I think they are doing or not, or maybe I have to wait for them to launch in Guwahati so that I can avail their service. So this was the e-commerce comparison. I'll close these things to dal thing and all. Okay, and I'll just go here and what I want to do, I do trading view, right? So trading view. Okay, so we discussed how much business we discussed, and then fundamentals we discussed, and then we discussed the Dmart ready part. Now let's talk about the charts. Now chart is something which I didn't want to discuss in a whole for Dmart because it's a long-term stock. It's stock which you can have in your portfolio, and then you can what's say you can just relax. So because this can be a very good multi-bagger. Saying multi-bagger, I told you one point which can make the stock go 10x. I'll just talk about that, otherwise forget. So the face value is 10 rupees. Now, if the face value remains same and if you expect this company to go 10x, that means the market cap should multiply to 10x, like 2 lakh 50, it's only 2 lakh 50,000, become 25 lakh crores, which becomes little like kind of not very likely scenario to happen in this very small amount of time. One thing that can happen is that their stock price very high, 3987, high in the sense compared to like what people perceive, like stocks 100 rupees, 200 rupees are cheaper and 4,000 rupees are costly. They don't see fundamentals. Now, stock worth 4,000 doesn't involve a lot of investors. Now, if they go for stock split, so if they go for stock split of 10, so the stock of 4,000 rupees around can become 400 rupees. So it becomes more exciting to a lot of retail investors who don't understand the difference. Or like suppose you buy, you want to buy 4,000 worth of stocks, you buy only one for Dmart. Same thing, you can buy 10 stocks when it goes for 400 rupees. So for some investors, it looks like a good number. 10 stocks, I have 10 stocks of Dmart. It can multiply that time. Fundamentally, there's no difference. Sorry, fundamentally there's no difference, but psychologically it's a difference. So if the stock goes for stock split, there's a very good chance that stock can go up to 10x also. Market cap and all always multiply. So there's no impact on the market cap for stock split, but psychologically the stock can go to 10x if this psychological advantage come into picture. That means stock split. And I am personally thinking there's a good chance that go for stock split. Now this is what I think. They have not said anything. It might not go also. The way MRF never ever went for stock split. If I just search for MRF, you will see MRF's price is 76,000 rupees one stock, and they have never ever gone for stock split. So maybe Dmart becomes the same company where they will never go for stock split. Nobody knows. But if they go for stock split, there is a very good chance that they can become 10x here. Without stock split, also they can become, but the chances of becoming 10x if they do stock split becomes faster. Like they will reach that 10x destination much faster if they go for stock split. This is very important. Note it down. Okay, this might be the lucky thing which can happen to investors of Dmart India at this point in time. People invest in IPO, they already got the return of 10x, so they are already rich. People who invest now, they can also become rich, 10x rich if they go for stock split. Now let's talk about Dmart from chart. Why chart? Because some people might be interested in swing trading also. I like swing trading a lot, so I'll talk about it from that angle. I'll not do swing trading in this stock. It's a disclaimer. I'll never do stock trading in this particular stock. It's a very, very good fundamental strong stock, and I just don't want to do it. There is no reason for it. I just don't want to do it. Now let's see this kind of graph. Okay, now why I'm saying this, because the stock was completely going down, then it tried to touch this top. I'll just try to do this. You want to touch this top, and this happened on the day when 26th May. After this started like a little bit correction. It bottomed out. The bottomed out thing was almost same support. I'll not say bottomed out. It might go correction again because of this market scenario, but till this time frame is bottomed out and started moving up again. When the result of it that the sales becomes 100 2x and the profit becomes multiple, all those things came out, started moving up. So this is also a good resistance. So you can see support and resistance is on the same point. What the hell is wrong? Support and resistance are the same. So this makes this uh, particular thing as a range. Okay, now when I say range, it's not a target or something. I'm just trying to put this number. So this 20% thing is a range. So if it falls down here, if it takes a support and start moving up, you can buy here. Okay, if it falls down, okay, then you can have a swing trading target of 20%, because this range is very important. This is one thing. Second thing is that if it breaks this and there is no more correction, then it might give you a cup with handle pattern. So once cup with handle pattern means we have drawn in the past also. Long back we used to draw cup with handle pattern. I'm not sure if I can do it from here, but this is something which cup with handle pattern little bit, right? So this is something what you can do. If I see cup with handle pattern, I'll draw this line. I was creating this line, so maybe I'll need to create this. I'm sorry. Okay, I'll do this. So here this is the line, right? So you take this line, put it on top, so maybe you'll get this target. This should be also 20% what I think from the top price. So if you see from here, it will be also 20%, but if it corrects little bit, maybe it corrects here, then it can also give a return of around 40-45% from this price. Now again, it's around 43%. So again, this is scenarios, multiple scenarios that can happen. But if you want to swing trade, my suggestion would be that if it falls down, then definitely buy this stock for swing trading. For long term perspective, this is definitely a good purchase stock what you can do. Right? So this was a discussion. It went up to 25 minutes. Was the longest video whatever I've done on this channel. So I hope this was helpful. I hope you like it, and do leave in the comment section if you have any feedback for this kind of video. If you want me to do more of this kind of videos also, this will be more helpful for me to understand what kind of value I can create for you as an investor or as a kind of friend, on like virtual friend who also invest and become want to become financially free. Okay, so thanks so much for watching. Stay happy, stay safe. See you later.